What is the role of the Federal Reserve banks? Have you ever wondered how the economy stays stable and functions smoothly? The Federal Reserve banks play a vital role in this process. So, what exactly do they do? The Federal Reserve banks are the operational arms of the Federal Reserve System, which is the central bank of the United States. Their main job is to help maintain stability in the financial system, especially within a capitalist framework. One of their key responsibilities is to implement monetary policy. This means they influence interest rates and control the supply of money and credit in the economy. By doing this, they help manage inflation and support maximum employment. These goals are essential for a thriving capitalist economy. The Federal Reserve banks achieve this by conducting open market operations. This involves buying and selling government securities, which directly impacts short-term interest rates and liquidity in the banking system. Another important function of the Federal Reserve banks is to supervise and regulate commercial banks and other financial institutions. This oversight is crucial for ensuring a safe banking system. By preventing bank failures, they help maintain the flow of credit and keep the economy moving. This is vital for the efficiency of capitalist markets. The Federal Reserve banks also provide payment services. They process checks and electronic payments, which makes financial transactions easier for everyone. They hold reserves for banks and distribute currency, ensuring the banking system operates smoothly. During financial crises, the Federal Reserve banks act as lenders of last resort. This means they provide emergency funding to banks and financial institutions that face liquidity shortages. This role became particularly important during recent financial crises, where the Federal Reserve intervened to prevent major institutions from collapsing. By doing so, they help restore confidence in the financial markets. While this intervention supports the overall capitalist system, it can also raise questions. Some argue that it challenges the idea that only the most efficient firms should survive. The Federal Reserve's support can sometimes keep weaker institutions afloat, which leads to concerns about fairness in the market. From a capitalism perspective, the Federal Reserve banks help create the right conditions for capital accumulation and investment. They ensure a stable monetary and financial environment, which is essential for economic growth. However, there are critiques about how selective intervention can distort market discipline and lead to situations where certain firms benefit more than others. In summary, the Federal Reserve banks are crucial institutions in the capitalist financial system. They balance the goals of economic stability and growth while ensuring that financial markets function smoothly. Their actions are key to preventing failures that could threaten the broader economy.